we often talk on the show about the volumes in crypto exchanges, what we're seeing in DeFi. Can you share with us, first of all, how big is the private transaction OTC sector when it comes to digital asset transactions?
Well, sure. First of all, thanks for having me on. The private market mainly is a very cyclical market, even in crypto and across equities, right? So in crypto at the moment, the private markets trade anywhere from $1 billion to about $1.5 billion monthly in trading volume, I would say.
And when it comes, let's say, in that vertical, let's say private transactions more holistically, there's obviously a lot of secondaries as well. We used to see this a lot with tokens. What are you seeing in that perspective? Are we still seeing a lot of secondaries of locked tokens and people trading those kinds of instruments?
So the firm, I'm the CEO of Stix. We primarily specialize in secondaries, right, for locked token trading in crypto. It's also a very cyclical business in the sense that people in bear markets like to buy things and hold those things and be directional. Whereas in very frothy markets like these that we see in altcoins, where you see altcoins go down anywhere from 50 to 80% within a matter of months, what we've seen over the last 18 months very evidently, a lot of the capital allocators are now looking at market neutral strategies where they allocate money into the OTC arbitrage, as they call it, where they buy locked tokens at a discount, whatever discount they get to spot, and they take advantage of a very liquid futures market for that particular altcoin to hedge their exposure.
So when you come on this particular topic, I presume those who are selling these tokens are the foundations, the crypto firms, or even individuals who want to get out of these locked positions they have. But when it comes to the buyers, who are you seeing? Are they mainly funds like private market neutral funds who are buying? Is it VC funds? Is it long-term investors? What are you seeing on that front?
It's a tale as old as time, where the VC funds are actually the sellers and the LPs are the buyers. Now, on the buy side, primarily, I would say prop trading firms and people allocating balance sheet capital, private wealth, are the main drivers of all of this growth in the OTC markets.
And when these secondary transactions happen, maybe could you share with us, like, what are you seeing in terms of discounts and trends on that perspective? I presume when you're buying these secondaries on the market, you're buying them at a discount. And how is that market changing? Yeah,
of course. I mean, look, discounts either compress over time or they increase over time, right? It completely depends on where the altcoin is. So something like for the top 10 altcoins, like Solana, for example, right? Solana has a very liquid secondary market for locked SOL, especially given the FTX state. This time last year, maybe about 14 months ago, so summer last year, locked Solana was trading anywhere from 30 to 40% discount to spot, right? There was heavy trading volume. The FTX estate sold SOL about 50% discount at $65 when it was trading above $130 in spot markets. Now, what we've seen is the locked SOL discount has compressed. Sure, the vesting period or the lockup period of the investment has gone down by 12 months, but it's compressed down to something like 15%. Reason being is, first, the type of buyer that they get for locked Solana is very indifferent to pricing, right? You got public equities who have raised, SOL Strategies, for example, in Canada, has raised, capital from their, through pipes to buy locked SOL on the open market, and this is price. They're indifferent to price, and they bid above average market value for these locked tokens.
Very interesting, yeah. So there's the discount, and these guys are bidding above some of these. And actually, you mentioned about these digital asset treasury companies. It's obviously all the talk right now in crypto markets. What's your view on these digital asset treasury companies and the impact, in particular, they can have on secondaries in these various tokens?
As a disclaimer, I'm personally an investor in a few, and Stix recently supported the IP strategy for Story Protocol as a major investor in that deal. Now, coming back to your question, I'm very supportive of it. It's basically a way of private capital in traditional markets, in TradFi per se, expressing its interest in gaining exposure to the crypto markets, right? Majority of these deals are still, Bitcoin and now ETH, right? With Bitmine having raised, Bitmine now owns over 1 million ETH, right? Over 1.5 million ETH, for example. I think that's like $8 billion at the current price. Now, you've got Bitcoin, where MicroStrategy actually started this whole financial structuring, where MicroStrategy sells convertible notes, basically borrowing capital to buy BTC in the hopes that it appreciates in value and that the stock trades at a better discount to NAV, at a better premium to NAV. Now, you've also got recently altcoins. Altcoin founders are taking advantage of all this capital on the sidelines wanting to get exposure to tokens in the public markets, right? You've got, Athena, a very successful stablecoin, having raised a very successful, pipe deal through its TLGY stock. You've got Story Protocol and Andreessen Horowitz-backed Layer 1 that has recently raised $100 million, backed by Andreessen. Andreessen Horowitz, the biggest venture fund in the world, right? Is their only DAT investment so far, and probably will be. So you've got all of these altcoin founders who are taking advantage to raise this private capital to either, they're doing three things with it, right? First, holding and generating yield. Either they're buying locked tokens from the foundations and early investors, or the foundations are taking that cash and bidding their own token in the spot market in the hopes that the price goes up. Now, there's all sorts going on right now, and I think it continues to get wilder and wilder because probably about less than $5 billion has been allocated to altcoins outside of ETH.
And the reason it's getting wilder and wilder is it because there's obviously investors don't want access to these instruments. And you can argue that many of these investors want access to digital assets, but they're not allowed, or they cannot trade the ETF, they cannot trade crypto directly, and these actual digital asset treasury companies allow them access and exposure. But as Taran, the industry, as it becomes easier for these to trade crypto directly or buying the ETFs, or there's more ETFs of these altcoins, what do you think the impact will be on these digital asset treasuries companies?
Yes. So the first question, ETFs are very passive, right? They cannot hold, they cannot stake, they cannot actually go out and lend the tokens they hold. You can't do anything with it. Whereas these public market equities, they're just companies, right? Companies can do whatever they want with their balance sheet. They can invest, they can lend out these tokens, they can earn yield on these assets. And a lot of the times, the assets are yield bearing. So actually, they become traditional businesses earning real revenue. Now, the problem is when these tokens start depreciating in value and the stock trades below their NAV. Those large companies like BitMine, SharpLink for ETH, and also MicroStrategy. Saylor has come out and said he will not raise new capital under when MicroStrategy is trading under an MNAV of 2.5x. That really affects the entire market, and that's Saylor making a statement about his stock value that everyone else really looks at. They're very risky, right? I think there's a lot of sideline capital still. A lot of these private deals, these PIPE deals, PIPE is a public investment in a private investment in a public equity. A lot of these PIPE deals are still, very high EV deals, and people want to invest in these, and they will continue investing in these until the music runs out.
I think it'll be very, very interesting. I've been pleasantly surprised to see how much interest there is on these digital asset treasury companies, and it seems the party is continuing and seems to be continuing for some time. That was Taran Sabharwal. Thanks for being with us, Taran, on Crypto Weekly.